Hey guys, welcome back to FarmSys training tutorial on technical analysis. I hope you're healthy and doing well. So my name is Sam and I am one of the market research analysts this term. And today we will discuss about trend lines and price patterns. So in the previous video, we had a brief introduction on what is a technical analysis, its benefits, assumptions, as well as one of the most used charts in a technical analysis, which is the candlestick chart. If you haven't watched the video, make sure to watch it and give a thumbs up if you like it. In this video, we'll cover on what is a trend line, the different types of trend lines, and how to spot the different types of price patterns. We will use the recent price charts to illustrate the patterns, and hopefully you can use this knowledge to make a better trading decision next time. So what exactly is a trend line? Well, a trend line is basically a line that represents the price trend of an asset. And specifically, we can look into its historical price chart and form a line which will connect the high points or the low points of the price. Trend lines are among one of the most fundamental tools that are used in technical analysis, and this is often used by traders to take their trading position. So without further ado, let's take a look at Apple stock chart over here. We can see, for example, that we can connect all the low points of the price here with a line and all the high points of the price here with another line. Now, this green line over here is what we call as the support trend line. And we perceive it as the line that supports this price from falling below this support line. So it would be hard to break this line. And also for the red or orange line here, we can call this the resistance trend line. And this line basically resists the price from moving upwards or trying to break upwards from this trend line. These two lines are the two different types of trend lines. And in this case, we can also see that since the general market trend here, or the general price trend of Apple stock chart here is going upwards, we call this a bullish trend. And it symbolizes when a bull is trying to fight, it raises its horns. Now, we can also take a look at RBC stock chart over here. And similar to the previous chart, we can draw all a line to connect these bottoms over here. And we can see this support lines as well as this resistance line. And since the overall or the general price trend is going down, we call this a bearish trend. When a bear fights, it usually fights down, and that is why we call it a bearish trend. So what exactly do we use these trend lines for, right? Well, we can use these trend lines to follow the trends that are forming in the price charts, or we can also follow what it is called as a price pattern. So a price pattern can be regarded as series of movements between the price trends or some sorts of intermediary trends. We can spot a price pattern from drawing our trend lines, and the price pattern might be able to give a signal or a hint on the direction of the next trend when the pattern breaks. So what happens if a pattern breaks? Well, in general, there are two possible outcomes. The trend will either follow the previous trend, or it would be the complete opposite of it. Now, in the case of this current trend following the previous trend, we call this a continuation pattern. And for this pattern, the current pattern can be regarded as just a pause between the two different trends. And traders can use this continuation pattern to get ready when the price breaks and place their positions to go along with the direction of the previous trend. So there are several types of continuation patterns. And in this video, we will cover only the four most common types. So the first one is what we call as a pennant. And this pattern results when the support and the resistance line finally meets or finally converges, with the support moving up and the resistance moving down. Now, during this convergence, the volume usually decreases and it will increase again once it breaks the pattern. So to visualize here, let's take a look at this left chart over here, which is basically the WTI oil futures chart. Now we can see here in the middle that this resistance and the support finally converges, and this is what we call as the pennant. And also the previous trend is going upwards. And this looks like a pole as well. So when we piece it together, it looks like a complete set of a pole and a pennant. Now, the price here breaks just above the resistance line and it continues to go all the way up over here. Since the overall price trend here is going upwards, we call this a bullish pennant. And one more thing to note is that as soon as this price over here enters this pennant, we can see here that the trading volume actually goes down, and then this pattern over here, when we enter the pennant, sorts of giving time for the market to breathe for a while before pedaling on its gas again and shoots back up here in this volume, in this trading volume, and shoots its price up again. Now, inversely here in the right side, we have the exchange rate chart of US dollars to Japanese yen. And we can see here again that the resistance and the support converges into a pennant, as well as a previous trend of a downwarding pole. Now, again, if we piece it together, it looks like an upside down set of a pole and a pennant. And here, when the price breaks, it continues all the way downwards below the support line. And since this trend is overall going down, we can call this a bearish pennant. Now, what if we have the same or the similar pattern as the pennant, but now we have the support and the resistance actually going in the same direction and parallel with each other? Now, this pattern is what we call as the flag. And during this flag formation, again, usually the trading volume will decrease and shoots up again once the pattern breaks. So now looking at the USD to Canadian dollars exchange rate here in this left chart, we can see that the resistance and the support are all parallel to each other, making a flag. And it is also accompanied by this upward trend beforehand, before entering this pattern. Now this looks like a complete set of a pole and a flag. And again, when this price breaks this resistance line over here, it actually causes the price to spike up again. And we can also see its influence on the trading volume here. As the price go up, the trading volume increases. And then when it enters the pattern, it actually starts to decrease before it actually increases yet again during this price break over here. And again, since the general direction is going up, we call this a bull flag. And also we can see here that it is also very similar to the pennant that we had just now, which represents the continuation pattern. So this pattern is a continuation of this this trend is a continuation of this previous trend before going in the pattern over here. And similarly, in the right side, we have the American Airlines stock chart. We can map out its support and resistance, make it a flag, and also accompanied by this downward shaping pole over here. Now, the price breaks below the support line over here. We can see that this makes it shaped like an upside down flag and breaks the price even further down. And because the general trend is going down, we call this the bear flag. Now, the other type of price pattern that we will commonly encounter is called the triangle. And it could be either symmetric or asymmetric. For asymmetric, it could be either ascending or descending triangle as well. So as its name suggests, the support and the resistance will form a triangle. And again, we are looking for the breaks in price. So for example, in the left chart over here, we have the CRM, which is the Salesforce stock chart. And then we can see that the resistance and the support forms this symmetric triangle. And for symmetric triangle, we are actually looking for the direction of the break. So either it breaks the resistance or it breaks the support. And in this case, it breaks the resistance, so the price goes up over here. Now, for this chart in our right, we can see this USD to Canadian dollars again, exchange rate chart. We can see that its resistance is going down while the support actually remains flat. And this is what we call as a descending triangle. Now, unlike the symmetric triangle, traders usually believe that for descending triangle, the price tends to break down or falling from this support line over here. So we will expect the price to continue falling once it breaks out from the support line over here. And this also applies in the opposite way for ascending triangles as well, where the price usually tries to break up from the resistance line. Now, the last continuation pattern that we are going to cover is what is called as the cup and handle, and it consists of two major parts of, guess what? A cup and handle, or in this case, a wide big through followed by a pennant or a flag. So here, for example, we have this Tesla stock chart, and as we can see, for the right side over here, we have its resistance and support mapped out, and it looks like an ascending triangle. So we call this the handle part of the cups and handle continuation pattern. And we can also combine this with the fact that prior to the formation of this pattern, we actually have an upward trend over here. So it kind of looks like a pennant. But this upward trend over here is actually a part of a bigger and wider U-shaped through that is caused, in this case, by the recent market crash in March. And this U-shaped through is what we call as the cup. So although it's not intuitive at first, we can actually see now that it looks kind of like a cup and handle for tea. And we believe that for this cup and handle shape, the price will usually try to break out from this resistance here and shoot back up. Now know that for cups and handles, usually they need to have a big, wide U-shaped through instead of a sharp and narrow V-shaped through. And that's it for me today. I hope that this video can add your knowledge on the basics of technical analysis. And hopefully you can make an even better and well-informed trades in the future. Now, don't forget to click the like button if you like this video and subscribe to the FarmStar channel to stay tuned for our next video. Until then, I wish you the best of luck, happy trading, and goodbye.